Welcome to the Private Lenders Podcast with your host from Hard Money Bankers, Jason Balin and Chris Haddon. This podcast is sponsored by hardmoneymastermind.com.
So recently, although overall loan units have been down, maybe down 10, 20% on the year compared to the previous year, loan volume, loan amounts individually, and overall deal quality are all up in 2023. And we're going to talk about some of the reasons why.
Yeah, you might think that, oh, well, hey, dummy, the real estate market is increased in value. And that's why, you're doing higher loan amounts because the values are higher. And maybe that has something to do with it. But more importantly, there's less liquidity in this space, right? There's less liquidity. There's less liquidity in the space. A lot of the institutional capital is not available currently. And if they are, they're kind of dwindling out. And in essence, we get better looks with more qualified borrowers that have just better transactions in the median housing price neighborhoods, which is what we all want anyways.
Yeah, it's basically what happened. A lot of the institutional capital that jumped into our space like 7-8 years ago has changed a lot with rising interest rates, a cooling real estate market. They've seen changes, big changes to their rate and points. So they're basically, like, we lend at 12.99 and 3. They're basically up to where we are now. And their underwriting guidelines are constantly changing. And we get deals every week that fall out from other lenders who don't control their own underwriting. They don't control the capital, so they don't control the decision making, right? And if that happened just this week. One fell out on Monday. We're closing it tomorrow, where they basically did a bait and switch. I don't know if they did a bait and switch intentionally or not, but they had quoted one price, rate, and points and loan amount. And then when it came time for closing, the day before closing, they changed it all. They raised the rate, they raised the points, and the loan amount might have changed as well. And the borrower wasn't having that. Like they just didn't want to be jerked around like that. They took it personally, and they contacted a broker that we work with. We quoted it the same day, started collecting all of our documents, getting title work in, and we're closing tomorrow. And it's a good deal. It's $550K. It's in a good area, Montgomery County, DC. Solid deal all around. And that kind of stuff has been happening more and more frequently in basically all year, definitely the past 6 months. And so even though like our units are not where they used to be, like we're not cranking through 25 loans, like it's been a little off from that, 25 loans a month. It's been less, but the loan amounts have been more than making up for it.
Yeah, and the quality of the deal has been more than making up for it. And that's what this business is about. Like, this isn't about kind of an ego-oriented business where it's like, oh, I got to do more, I got to do more, I got to do more units, I got to do more units. The only thing we care about is bottom line profits. Net profit's the only thing that matters. If you can do that, if it takes you 50 deals a month to do that, fine. If it takes you 20, 10, one deal a month, that's fine as well, right? Like whatever your number is, that's what you're going to have to strive for. And, honestly, we go through a lot of leads and loan inquiries every month to just cherry pick the best of the best of the best of the best of the best. And we'll do every good deal that we can get our hands on, right? Like that's no problem. I'm not turning down good opportunities. Every good deal we will do that makes sense, that fits into our widget box. But, just like anything else, why do 8 deals a month if you can make the same amount of money on 4 deals a month? That's what it's about. And that's what's important. And that's what we're seeing where, some of the dirtier deals have become more profitable because we can potentially charge a little bit more. And some of the best A+ deals we're winning or we're getting because they don't have alternative solutions anymore.
Yeah. And also on this topic, I want to throw in the niche of small balance commercial lending, because for a private lender that knows how to underwrite, and there are some different things about small balance commercial compared to resi, like fix and flip, in terms of due diligence and underwriting and things to look out for and looking at income. But there are some really, really good opportunities in that, like, few $100K to maybe like 2 million in space. A lot of these loans in our world end up being, 500 to $1 million is a very, very common amount. And there aren't too many lenders out there that are going to touch it. So when we are working with inner circle members that want to expand, that's one of the things that we suggest is that, learn small balance commercial. If you're already actively lending on resi investment deals, it's not that different. It's just a little bit different. And that can, those deals are also quality. In addition to the loan amount, the borrowers are more sophisticated. They're often solid income properties, and they're people who don't go into default, knock on wood, right?
No doubt.
So that is something that I would consider if you're looking for higher quality loan amounts and larger loan amounts, adding into your mix.
Yeah. And to sum up all of this stuff is, obviously have a front end marketing machine that can continue to spit out good opportunities, weed through them, do the best of the best of the best, right? And as you grow and as you do more marketing, your deal quality should get better. It's just that simple, right? When you're starting out and you only have a few deals a month that come in, and a few deals are like repeat borrowers that you might give them higher leverage, cheaper terms. Not recommended, but I understand. But as you continue to grow and you have, have more lead flow and more deal flow and things like that, try to be more conservative on some of these things and do, lower leverage deals, lower loan amounts, higher fees, things like that until you really figure out that sweet spot. But in general, where we're at in the market, and I would say ever since October 2022, when a lot of things changed, short-term rates went up, mortgage rates, actually went up as well. It softened the real estate market in a lot of different areas, and a lot of the institutional capitals. You don't have all that much competition to begin with. So kind of know what your value is, know what your worth is, and just do good deals. And there's the ability to do kind of the best of the best deals and charge a premium for them. And that in essence turns into a good long-term loan portfolio. And, this model works the best in the median housing price neighborhoods. Not to say you can't do stuff in the lower end areas or the upper end areas, but median housing price neighborhoods typically work the best. So depending on what geographical market you're in, figure out what the median housing price neighborhoods might be. Could be $100,000, could be $500,000. Whatever that is, stick to that. Those are your widgets that you deal with. And like what Chris said earlier about small balance commercial stuff, if you've never done that before, you're not familiar with commercial assets, start learning about them. Not saying start lending on them right now, start learning about them. We have some segments in the Hard Money Mastermind. We've done some videos and some coaching calls related to that. That's a resource that you could use, but learn about them and potentially start quoting stuff. Put a marketing campaign out there that says, hey, I just expanded into this state, or hey, we also do small balance commercial loans, right? Try to get deal flow, get people on the phone, talk to them related to those opportunities. As a deal comes in, that's a live deal, you can use that as a learning experience and kind of learn. That's how we learned commercial real estate was, we started looking for opportunities, looking for deals. They started to come in and we started underwriting them, and we were ultra conservative. And we're still conservative on these things, nothing really above 50 LTV, but we were ultra conservative. And I remember once we passed on this deal years ago, probably year one or year two in this business, that ended up that it could have been a home run. I don't know if you remember this one, Chris, but we lent they needed $400,000 on a few $1 million building. And we were scared to do it. It was a big loan amount for us at the time. We didn't understand the real estate and on it. So we didn't do it. And that's okay. It's a learning experience, but just get reps and talk to people and see what's up. You never know. We've done loans where the building was purchased for $1 million with 1031 money, and they needed $150 or $200,000 just to bridge that gap. So we gave them $200,000 on a $1 million purchase to an 800 credit score borrower because they did a 1031 and their diligence period was coming to the end and they just needed to close. And they were scared that their bank wasn't able to do it, which they weren't. So we came in. But there's lots of scenarios like that if you're out there proactively looking for it.
Absolutely. Got to keep yourself out there, get the phone ringing, get that email inbox full of leads. And I hope that your loan amounts and your deal quality are also way up. Hopefully this continues into 2024. And also real quick, if you haven't done so already, go check out hardmoneymastermind.com, create a free account. We'll see you in there, and we'll see you on the next episode of the Private Lenders Podcast.
We hope you enjoyed this episode of the Private Lenders Podcast. Please note that the opinions stated by all the speakers on this show are only opinions and not intended for legal, financial, or accounting advice. Please make sure to always check with your own legal, accounting, and financial professionals. If you enjoyed this episode of the Private Lenders Podcast, we'd appreciate it if you would spread the word. Make sure to check out hardmoneymastermind.com, the #1 free community for new and experienced private and hard money lenders.